Hey everybody, welcome to the Market Board. My name is Dave, and today is episode 4 of our super simplified stock series, and today we're covering the Dow, baby. Born in 1896, the Dow Jones Industrial Average, aka the Dow, was an index of 30 big and prestigious public companies, and it's used to measure the general stock market. So how did it get its name, you ask? The Dow Jones was founded by Charles Dow and Edward Jones, and the duo had previously founded the Wall Street Journal 7 years prior. Two volatile facts about it is that the largest single-day percentage gain came on October 13th of 2008, where the Dow rose 11.1% on news that regarded financial bailouts. Whereas the largest single-day loss came on October 19th of 1987, known as Black Monday, where the Dow lost 22.6%. Before we jump in, I think there's a couple things that you gotta understand about the Dow. And it's first that indexes are there to group together particular sets of stocks so that you can get a quick sense of the market's movement, with the Dow being made up of 30 large blue chip US companies, which are picked from time to time by a selection committee. They tend to be big, profitable, and have long track records as publicly traded companies. When people say the market is going up, this is generally what they are referring to. Something worth mentioning is that the Dow is price weighted, meaning that it's averaged on the price of stocks, not their market capitalization. I generally prefer to refer to the S&P 500 as an indicator since it's value weighted. Additionally, the Dow only represents 30 companies and shouldn't be used as a sole indicator of how the broader markets are performing. So we asked just who the heck is in the Dow, and if you're a member of the top 30 in the Dow, you're officially a blue chip stock. These members include 3M, American Express, Apple, Boeing, Cisco, IBM, Intel, J&J, and many, many more. But before we move on and figure out just how the Dow gets calculated, excuse this brief interruption, but please just make sure that you press that like button and subscribe to the channel to show your support, because it's always appreciated. But moving on, the Dow reflects movements in the stock prices of all 30 of its club member components. Since it's a price-weighted index, stocks with a high price move the index the most and is divided by a figure known as the Dow divisor. At one time, the Dow divisor was a constant number, but that's not the case anymore. It's a little complicated and we won't get into the full-on math calculation part of it, but basically the adjustments were there for corporate actions like stock splits, since the index is price weighted, and for when additional companies get added to keep the number consistent for investors. The key takeaway with the Dow is that companies with a higher share price actually move the Dow more. So you're probably asking, well, how does that differ than the S&P 500? We're going to cover that in a different video, but basically to sum it up in 2 points, the number of companies included is 30 versus 500, and how the stocks are weighted. With the S&P, it's value weighted, meaning it's based on market capitalization, versus the Dow Jones, which is price weighted, where it only factors in the price of the stock, not the actual value of a company. But how is this different than a NASDAQ, then you ask? Well, the NASDAQ isn't generally a great assessor of the broader markets, to be honest with you. Its components are actually mostly made of technological companies, so it's better assessment of how tech companies are doing for sure. If you've ever heard of the dot-com bubble, it's actually referring to the NASDAQ, when the stock of tech companies stretched far beyond their earning capabilities and eventually plummeted 78%. Now surely you're going to realize that this was my briefest video yet, but that's really because in my opinion, you don't need to know an overwhelming amount about the Dow Jones. Sometimes it's honestly better just to keep things simple. I hope this quick bit though did make it much clearer as for the role of the Dow in the marketplace for you, but if you have any questions, please just drop me a comment down below and I'd be happy to talk to you about it. But just as one final reminder to everyone, I'm an individual investor. I am not a financial advisor. This should not be considered financial advice. All opinions expressed are my own and are subject to change during mood swings. My name is Dave, and this has been The Market.